Hello, everyone. Today, we're diving deep into Datavault AI, trading under the ticker DVLT on the NASDAQ, a company operating at the crossroads of artificial intelligence, enterprise-level data systems, and the rapidly evolving world of Web3. Over the past week, DVLT's stock has shown a surprising resurgence, climbing nearly 18%, even though it's still down more than 23% over the last month. Yet, on a year-to-date basis, the stock has managed to stay relatively stable. For many investors watching from the sidelines, this rebound has sparked speculation that the company may finally be moving past its slow build phase and is making meaningful progress on its long-promised real-world asset, RWA Tokenization roadmap. Now, before going further, it's worth remembering a fundamental principle. Instead of betting everything on a single stock, especially one as volatile and high-risk as DVLT, building a diversified, high-quality portfolio is typically a far better strategy. Long-term data consistently shows that portfolios built around quality tend to outperform the market, reducing the uncertainty that comes with choosing individual companies. But with that said, let's break down what exactly Datavault AI is doing and why investors are becoming increasingly interested. Datavault AI is carving out a niche in one of the most transformative concepts in modern finance: converting real-world physical assets. Think energy projects, mining reserves, precious metals like gold and copper, real estate, carbon credits, invoices, royalties, and even large sets of enterprise data into digital tokens stored on the blockchain. This process, known as tokenization, turns traditionally illiquid assets into digital forms that can be traded globally, around the clock, with fractional ownership and far greater transparency. Once an asset becomes tokenized, it gains liquidity, programmability, and in some cases, the ability to automatically distribute royalties or yield through smart contracts. DVLT provides tools and infrastructure to make all this possible. Their system includes AI-powered data evaluation tools, which analyze, verify, and secure enterprise-grade data so that it can be safely used, monetized, or converted into tokenized digital products. Blockchain-based tokenization frameworks, enabling large-scale projects, such as geothermal plants, mining sites, or real estate portfolios, to be represented as digital tokens. DataScore, a platform that creates digital twins of assets, visualizes data in a cohesive way, and prepares both physical and data-based assets for tokenization. And finally, high-performance computing, HPC, giving the company the horsepower needed to process massive datasets, power token exchanges, and support the infrastructure for global Web3 deployment. The company's business model is built around licensing its technology, earning transaction fees each time an asset passes through its tokenization system, and collecting ongoing royalties tied to the value or volume of tokenized asset activity. In other words, DVLT positions itself as the underlying infrastructure, the digital rails, for enterprise tokenization worldwide. Every token created, traded, or utilized has the potential to generate revenue for the company, whether through upfront fees, perpetual royalties, or ongoing transaction charges. What really fueled the recent surge in DVLT's share price are several concrete business developments. First, the company secured two major commercial contracts, one with Triton Geothermal and another with MTB Mining, with a combined value exceeding $15 million. These are not vague partnerships or exploratory pilots. These deals include perpetual royalties tied directly to asset flows. Triton alone is set to tokenize a planned $125 million geothermal project, and DVLT will earn a 5% perpetual royalty on that tokenization pipeline. Meanwhile, MTB's $7 million agreement centers on tokenizing copper mining assets. For the first time, investors have real proof that DVLT's intellectual property can generate recurring, high-margin revenue. On the financial front, the company also strengthened its balance sheet with the second tranche of its strategic equity financing. This infusion of capital, including contributions in Bitcoin, eases the company's short-term liquidity concerns and supports the ongoing development of its HPC systems. These systems are crucial for powering the large-scale data exchanges and tokenization platforms the company is building. Improving liquidity has reduced an immediate financial overhang and added another layer of investor confidence. Another important factor is the growing curiosity from organizations across multiple industries. According to management, companies from energy, biotech, mining, and real estate are beginning to explore tokenization opportunities with DVLT. While most of these discussions haven't converted into revenue yet, the broad interest shows the potential scalability of the tokenization model. Investors saw this uptick in activity as a signal that the company's recent contracts aren't isolated wins. They may be early indicators of a larger shift. Now, despite all this positive momentum, it's essential to understand the risks, and there are plenty. DVLT currently trades at a premium valuation. Its price-to-sales ratio is approaching 10x, far above the broader market average of roughly 3x. The company's underlying numbers simply don't justify that premium yet. In the latest quarter, DVLT generated about $2.9 million in revenue, but still recorded a net loss of $33 million. Cash reserves are extremely low, representing only about 1% of total assets, and the company's debt levels are disproportionately high compared to its market cap. Margins are another red flag. The operating margin sits near 704%, and the net margin is close to 1,310%, accompanied by severely negative cash flow. These figures show just how fragile the business currently is and reveal how much execution risk is baked into the stock's valuation. Essentially, the company must deliver flawless growth to justify its current market position. However, there is one area where DVLT shines undeniably: growth velocity. Revenue has surged 148% year over year, and the most recent quarter alone saw growth of over 400%. This acceleration, combined with management's bold projection of $200+ million in revenue for fiscal year 2026, a massive upward revision, explains why investors are willing to overlook today's massive losses. DVLT is a high-risk, high-reward play. Its stock price is tied not to what the company is today, but to the future it claims it can build. Whether the company can turn its patents, early contracts, and HPC infrastructure into real, repeatable, scaled revenue will determine its fate. Until then, the investment case remains a blend of ambition, uncertainty, and the promise of a tokenized global economy. This is not financial advice.